Futures flat this morning ahead of the ISM's manufacturing index for April. China's official PMI rises to a 13-month high. Meanwhile, traders await earnings reports coming out later today from Pfizer and Sirius. I'm Brittany Umar, and the morning call starts right now.
I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar with The Street, and together we bring you the morning call. Stocks did slide yesterday. The S&P posted its first monthly decline since November. We had a very strong quarter, but it seems as though we've lost some of that momentum in the past 2 weeks, Scott. So what are you making of the action we're seeing?
I think markets are trying to digest what we saw in the first quarter. So in April, for us to be down somewhat, not a big deal. And we also had 4 strong days of gains last week, so having an off day yesterday and digesting those gains are healthy. You want bases to be built, you want chart patterns to get tight. In order to do so, you need some inside days, and yesterday was one of those inside days. So the question is, can we continue to hold higher and then break out once again?
So how does the S&P chart look like it's shaping up right now?
So if we take a look right here, you will see that ever since this little bit of a breakdown that we saw in the late stages of March, we held that 1357 area. If you want to take a closer look there, you will see that we actually put a double bottom in last Monday right here around that 1357. So since then, you had a nice 4-day move. So if you look at yesterday, that really doesn't show you much of a pullback. Okay, if you look at prior resistance that turns into, or prior support that turns into resistance, we were able to push through, and now we're holding it. So I would say as long as the S&P stays above this 1390 to 1392, where you could see in my quote, my Quotron right here, I think shorts are going to maintain or continue to be trapped. And then if we can continue to go sideways and then break above this recent high here, I think you're going to see another squeeze, and then all of a sudden 1422 comes into play.
So do we need to prepare ourselves for a possible downturn in the S&P when a lot of the recent economic data we've seen has signaled that the market may stall or slow in the summer months?
Well, yesterday we talked about being cautiously confused, because last week we did see Spain downgrade. You saw Britain go into double-dip recession. You've heard more negative chatter about other European countries, and our equity markets are still hanging in there. And then you hear, sell in May, go away. It's always bad. You always sell the second quarter, come back third quarter. Well, typically if everyone says something, that the market tries to make as many people feel stupid as possible, it might not happen, so you have to wait for the action. And as of right now, I'll even show you the chart of the Dow. You look here, it actually looks like it's even stronger than the S&P. Here is that low that came in on April 10th, which matched the prior low. And then look right here. Okay, I just showed you a double bottom in the spiders. Okay, the Dow held higher, so we're actually seeing strength in the Dow. And if you look the last 2 days, 2 nice inside days, hovering right in front of recent highs. So as long as we stay up here, I think the bears are going to be on the run. And if we can start breaking above this level with some volume, you're going to see another move to the upside. And you have to be long some equities if you're a market professional or a long-term investor. All
right. Well, we will have some data out today from some of the autos. Tell me, how much attention will be on that today?
I think there was a lot more attention the last data street that came out, because Ford and GM actually looked better. Now both stocks have broken down somewhat. So I think if we get anything positive out of Ford or GM or some of the other car dealerships or car companies, they're all going to be reporting. I think it'll help the markets, because if you look real quickly at Ford, stock broke down. I remember I was trading it. It actually hurt me right around this 13, came all the way into support. So right now this chart's telling me that Ford is not expecting much. Look at the chart of GM. Looks pretty gross here. It looked like it was going to break out above the highs. It failed. So both of these stocks are telling me that the street's not expecting much. So anything in line could help bounce it, which will also help some sentiment in the markets.
All right. Well, we've seen recent strength out of the commodities, especially gold, hovering around a 2-week high on Monday. We're seeing this whole pull and tug with, could gold be the safe haven that investors will flee to, or what do you think?
Well, right now, I think gold's going through a little bit of an identity crisis. No one really knows what to make of gold now, except for that it's been in an intermediate downtrend. So that's what I'm just calling it. It's an intermediate downtrend, and it's on the verge of potentially breaking to the upside. So if you look at the chart of GLD, you will see it's very interesting right now. All right, ever since it made this high or had this outside day back in late August, it's been pretty much controlled to the downside. And then if you remember about 2 months ago, you had that, that Fed announcement where it really got crushed. Look at this wide range potent move engulfing this whole section here. And what that did is that also controlled the direction to the downside. So on a macro level, you now have an inverse head and shoulders pattern. You have the left shoulder, the head, the right shoulder. And at this point, it's knocking on that door of this intermediate downtrend, because here you could have shorted it here, lower high, shorted it, shorted it. One of these times this trend's going to change. So I'm in GLD right around, I think, 160.40. If it can get above 162 with any kind of volume and velocity, I do think the next move is 165, and then we could even test this this area, which was very important way back in late February, which is right around 167.
So what indicators are you looking at to gauge gold's direction?
A lot of people look at the euro. I have the euro up also. If you look at the FXC, you will see that it has a nice tight pattern, very symmetrical. Okay, I love symmetrical patterns because when they're coiled, they're ready to move, and at least you have price points. If you look here, here's your level of support that's defined. This low here, or this area, was right around 130.41-ish going across, and now you have a series of lower highs, high, lower high, lower high. Will this trend change? So if the euro or FXC starts to break above this 132, all of a sudden that'll put pressure on the dollar, and that could help commodities. So if all of a sudden the euro has a nice move and the dollar goes lower, you'll see gold and you'll see silver and some of the other commodities start to break out.
Speaking of silver, we've seen a lot of large commercial traders cut back their short positions, not only in gold, especially in silver. Although silver has been the weaker of the precious metals, could this be a sign of a bottom, that traders aren't expecting gold and silver to fall that much further?
Well, it's probably good that they cover their shorts because they've made some money here, and you know how bulls and bears make money and pigs somewhat get slaughtered. And right now where silver is, it seems pretty cheap. It has been lagging this gold move, but this pattern also is getting tight. I think people who trade silver are going to wait for confirmation that gold is really not going to fail at this intermediate downtrend, but it's going to push through. So watch gold, and silver sometimes it usually lags gold. At times they go back and forth changing leadership roles. But if you look at the chart of SLV, you'll see it's nice and tight. It too has been controlled by this intermediate downtrend. You have a little bit of a red dog reversal right here where some entered. It was green yesterday. I would say for guys to get really excited, the SLV is going to have to trade above just say 30.65 with some volume. Every time it's tried, it hasn't been able to get above it. So really, this is the area that bulls want to see it close above, around 30.65 and maybe even up to 31.50. But I don't think you just could initiate there. Be in a tier 1 now. If it starts breaking above, then you add for momentum and motion.
All right, well, we're going to take a quick break, and then we're going to dive into oil names right after this.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Well, it's officially May, so it means warmer months are on the way. This is often a time when more retail-oriented energy stocks tend to perform best. So could oil be the new leading sector this driving season?
Well, I see some money flowing here. We've been trading the OAHs since the beginning of the year. It's been a very slow, methodical trade. XLE's actually been acting a little bit better. We did have a pull-in / correction, but it was very contained. If you look at the chart of the OAHs, you will see that it still has a series of higher lows. Here's the bottom that was made back in between September and October. Then here's another higher low, and here you go again, a higher low. Not a block burst, block burning or barn burning, whatever you say, type of trade, but it's holding here. Stocks are starting to act better within the group. I do think that we have at least some room to this moving average around 41.55. Then at some point, we have to test this resistance up here, and that comes in all the way up to about 44.53. And a lot of people love the third, fourth quarter story in these names.
And you're long Schlumberger right now, so how are you playing this stock?
Right now, I'm long it a feeler, tier 1. We use a tier system so we can get in, be involved, and then once it goes in motion, we could add for cash flow. And if you look here at the chart of SLB, it is acting much better. Okay, you can see here that it did hold the low. This was big time support. coming across. I think Stephanie Ling from Action Alerts Plus said she was buying it right here. Nice buy. I waited a little bit longer, but now that I see this nice flag type pattern emerging, I said I'll be in tier 1 as long as we stay above this 73, and if it could start getting above this 74, 73, or 75, you're going to see this downtrend that's been controlling the stock all the way back from almost July be broken, and then the next real area will be around 80. So this is a good spot to enter, and I think there's getting, some flows are going that way.
EOG Resources has been acting well. Scott, I'm wondering, how tempted are you by this stock, and at what levels would you buy?
Well, guys are trading the stock, and it's responded very well. I would say when we rallied earlier in the first quarter, we'd have big moves, and everyone's like, oh, these energy stocks aren't participating. But this time, last week, we had the 4-day move, and these stocks acted very well. Even yesterday on a down day, this stock acted well. So if you take a look at the chart, you will see, this is the last time we put a little bit of a pattern here, this small little downtrend, which we broke above. So if we've rallied 4 days in the market, the stock also rallied 4 days. And yesterday we were down, and it closed on the highs. So this is showing me some strength, some power. I think at some point this is in the game to take out the highs of the year. This is showing me some leadership. If you want to be involved in some of these names, this one's in the game also for higher prices.
There are a lot of fans of Exxon out there right now, not only of the company, but of the chart. So how tempted are you by this one?
This one I'm watching, it's on my alert list every day, and I probably should be long some already. There are two really nice patterns here. If you go to take a look at Exxon, it's a mega cap, has a dividend, it has everything you would want in a company. If you look here on a macro level, this is what I see. I see inverse, very big, head and shoulder, inverse head and shoulders pattern, where you have the left shoulder, the head, okay, and then it's not drawing the lines, and then here's your right shoulder with a nice channel. So it's consolidating near the high, showing relative strength above all the moving averages. If you take a closer look here for an entry, okay, it's holding higher. And if this could finally get above this 87.50-ish or 88 with some authority, you're going to see a breakout move with power, and traders will be all over this, and investors who've been accumulating in this high-level channel will be rewarded.
Exxon's competitor Chevron has actually been able to grow earnings at a faster pace than Exxon over the past 12 months. The stock has had a strong 4-day rally, so is more upside in store?
I think a lot of people say that this one has more beta than Exxon, and I know Jill has said that prior. She liked this way back when, and she's been doing well with it. It looks pretty tight, nice setup also. If you look at the chart here, I'm not really focused on this one as much, but here is your move off that support. This low area was really nice to trade against, this 100, 150. Nice 4-day move, powerful flagging. We love bull flags because bull flags mean they consolidate higher and they wait for continuation. So traders will be waiting for 106.80, above 106.80. This can continue, and I also think if you look at the long-term chart, it's in the game that at some particular point, this big resistance, look at this, how defined it is, will get taken out, but it's not as close to the highs as ExxonMobil, but you do have an intermediate trade in the middle right there.
All right, well, quickly, let's touch on Apple. Of course, yesterday giving back some of its post-earnings pop. The stock was down about over 3%, so should we be picking up shares here?
Before the morning call, I saw it down like 50 cents, and I got hurting it yesterday trying to find that bottom, so I bought some. I'm not exactly sure what it's doing. It might be up a few bucks because Apple is very tricky. As good as this company is, no one wants it. Like the market doesn't let everyone make free money. And on the earnings report, last quarter it also sold down for a few days, after the earnings report. But this time it was a lot more extreme. So yesterday was a day where people were trying to buy some. I did also. There was no bounce. If you look now, it's right in front of the 50-day. So what Apple does is it's tricky and somewhat funny, I guess. Here's a 50-day, and everyone thinks it has to get there. So sometimes it won't. So then people who are short and don't cover, they're trapped, and people waiting to buy it here at the 50-day, they have to chase it. So that's why I went along a little bit this morning. Or what they do is they take the 50-day, and everyone thinks they could buy it there, and they stop you out through it. Okay, and then once you're stopped out, it comes back above it, and then it's clean, and they get out all these sellers, then it goes. So there's a few different ways to trade Apple today. I have 3 different plans. I'm going to wait for the market to confirm it. Right now, I'm long some Apple. I think I bought some 384-ish, and then I'll see the action on the open, and I'll trade it accordingly.
And yesterday, traders didn't seem to mind so much the news about Barnes & Noble and Microsoft's deal. When it came to Amazon, the stock showed relative strength to the market. So will it last?
It looks like the shorts are trapped here. A lot of people weren't expecting much out of Amazon, including me. I wasn't very positive on the stock going into numbers, but they came out. Guys in my office were trading it after hours. They made a lot of money doing so. And even yesterday, they were armed with a continuation strategy. So you didn't even have to be long into earnings. All you had to do is be armed with a plan. If you look at the chart here, we talked yesterday, I think this is the new range that I drew, and then once it traded above that 228.69, momentum traders got involved, like guys in my office. They traded along and they saw a nice 3 points. So now the question is, you could do the same thing today. Obviously it gets a little bit tougher, as you had 2 days, but above yesterday's high of 233.84, that pivot, you could see a continuation squeeze, and then ultimately, the high is right around here where we're pretty close to. So Amazon is back in the game. Again, I avoided yesterday. I tried it. Some stocks have your number. This one has mine. So I'll let Sperling and the boys trade this one.
And LinkedIn earnings are, of course, this Thursday. So how do you advise heading into them?
Well, LinkedIn, this one I've been trading, and lately I haven't been as active, but I've talked about this being in the game for a big move this year. What you do is you look for the characteristics of what makes a big winner. Typically, it's an IPO over the last few years because the float is tight, it's new, it's innovative. A lot of people weren't sure of LinkedIn's identity. Was it the stepbrother to Facebook, or was there more? And from what I'm hearing from fundamental guys is that people love the job quality to it, where it's almost like an outsourced resource, or what's the department that does all the medical and does all anyway, it's the resource unit. So anyway, people are looking at it almost like a monster or a career builder. You have that, then you have the advertising aspect. So last quarter the earnings were good. This quarter it has to be really good, because if you look at the chart, it's coming right back to these highs. Technically, I think it's acting really well. Last time we had a buy on it was when it cleared this 95, and it gave you a nice move all the way up to 108. Since then, it's been holding this 95 to 98, and now I think that you can get some momentum above 110, and the earnings are going to come out. So if you're a long-term holder of LinkedIn, it's a little bit speculative because it's only been public, for a limited amount of time. Last quarter was really good. It was right around here. This quarter, if they come out with another solid quarter, I think institutions will get more confident. And I think at some particular point, we're going to be trading above this 120 IPO high. And right now, it looks like money's getting confident there.
Now, what about Las Vegas Sands? Over 10% off its yearly highs. So is it viable at these levels?
This stock, I put it like a short-term top and then came out with decent earnings and didn't find a buyer there. And then it broke a level that I was watching. So I've been out of it since. I'll show you on the chart this area. So if you take a quick look, this stock also, it shows you how you have to time situations. I got really excited about this company, and I still think it's going to be higher this year when it was going to break above this channel here. Look at this channel at 50, resistance, resistance, resistance. So when you break above and close above it, you get a nice move. And from 50, it made a really nice move all the way as high as almost, 62. Okay, I had also another viable pattern right here. If you guys remember with Jim Cramer on his show, I talked about it above 54, this nice bull flag. So if you take a closer look here, you will see that was another viable strategy. So here's a viable strategy, here's a viable strategy, and then look at this day. Everyone knows in my community that whenever you see an outside day or some type of red dog reversal where it opens on highs, closes on lows, you sell some. Then we also talked about this, uptrend, so to speak, that if it broke below, you also had to somewhat get out of the way. And then, PS, we're down here at 55.49. We're below the moving averages, so technically it's not acting as well as it's been acting, in the first half of this year. But I do think with time, maybe you trade a long versus yesterday's low of what was yesterday's low, about 54.67. Let it build a new base here, and then at some particular point there will be a new downtrend type of symmetrical area to trade it against. So maybe be long tier 1 versus area, and then if it starts to break above this, it can continue. But since this day, which we talked about and off the charts many times, April 12th, it's been more of a sell than a long. But you see a little bit of a reversal yesterday, so this could be your tradable pivot. But if it breaks this area, you get out of the way. So trade reverse yesterday's low, and then maybe you get a nice little bounce.
And finally, JP Morgan, always a stock we like to talk about in the financials. Is there more downside in store for this one right now?
At this point, we have some new points of reference. It's been in consolidation mode. It had a great quarter. Since then, it's been actually giving us signals when to be very long, when to be kind of flat. So at this point, I'm looking at some levels here. It got a little weaker the last 2 days, so that was in the weaker camp on why maybe the market won't just keep going. So if you look at the chart here, you will see. Overall, I went over this yesterday in the recap. It still looks great. From the December area all the way up to the highs here. Why not pull back? It did hold the 50-day, came up to resistance, didn't have enough power to break through 44, it reversed that day. Now you had a 2-day move to the downside. It's still above this pivot. So short term, some guys are probably trading adverse this 42.54. I know a lot of fundamental people out there love it, and so do I. I would think, for it to start acting better, all it's got to do is start clearing 44, and then the market and the financials will join the move, and that'll also indicate, rally back on with a bit more intensity than we're seeing right now.
All right. Well, being as it's May 1st, we have to ask, is the old adage, sell in May, go away, true? The last 2 years, that would have been the right play. So what's your strategy heading into this year?
Right now, I'm going to keep judging levels. And, we had the corrective type action. Since then, we had that reversal strategy where IBD put us back in a confirmed uptrend. But typically, confirmed uptrends are very tricky in May, June, and July. They don't amount to huge rallies, especially after the gains we saw in the first quarter. So I think it's going to be a very stock-specific trade this quarter, where you can have stocks that you could be long, stocks you could be short, ranges to play. And I wouldn't expect too much. I wouldn't just be a stubborn, opinionated short and say we're going to go down in the second quarter, because we always do, because some of those guys are in there now and they're rolling it up. Same way, you need to pick and choose your spots in what you want to be long. Use a tier system where you don't have too much risk, and just actively manage your positions. And if you're in 6 to 8 positions long, have a few hedges on just in case we get some of those headlines that the market hasn't seen in a while. Could be a France downgrade in the next few weeks, and at least you have a hedge on and you'll be able to sleep at night. All
right, and your focus heading into trading today?
Today I'm going to be focused on Apple again. I'm long a little, I'm long some SLB, I'm long a few different gold. I want to see if it breaks out. So my focus is pretty narrow. I want to see if gold can continue above 162 in the GLDs. I'm in SLB. I want to see if some other names join. I'm long some Apple. I want to see if I could add to it. Maybe we finally get that bounce that I'm looking for. And I want to see the spiders continue to do work above that area that I was talking about. Yesterday I tweeted 139.30 to 139.40. As long as we stay above that area, which was prior resistance, which now becomes support, it'll be constructive. So the longer we stay above there, the more the short's going to be trapped, and then I think the more power we might have if we eclipse that, on the S&P itself, 1402 to 1404.
All right, thanks so much, Scott. Happy May, everyone, officially. Happy trading, and have a great day.